Hello traders, Matt Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 7th of March 2017. The trap we're going to take a look at today is what I call an outside candle trap. It's actually a bit of an area as well where there had been some historical demand. If we just highlight this area in here, and you can see, you know that to be true, when you get a situation where price backs and fills, it kind of just moves around within a certain location, then it can't stay there anymore, and as a result of there being more demand there at that moment, it moves strongly away from that level. Now there's people going to be trapped in here as well. You see that big wick? Well, that big wick would have been an area, because this was a historical level where traders had been trading off. It breaks down through it and then it comes back, and obviously that then in the eyes of many becomes resistance, and that wick would have looked very much like it was selling off in real time. Of course, people go short and they get trapped, and then they've had to endure the nightmare of being in this trade all the way until it comes back into this area here. And what this allows them to do, if they went short in there, if they sold, right, if you sell, it equals, to get out of that position you must buy to do so, right? It's the opposite transaction, break even. Can't believe the luck, they're going to bail out. It's also a big round number which doesn't harm, and you've also got an area just above this, just off to the left, so you can't see that, that was historical resistance. And generally speaking then, traders will look to sell off resistance, right? And if you sell off there, where you're going to look to take some profit, you've obviously made the distance from there to there, and you are up some good pips. And I would suggest that in and around here is definitely a potential wise place to take some money off the table. That creates buy-in. So net, what we should see in and around this area is demand. Now then, the only caveat to this is that it may drop down to this lower level, so we'll keep an eye on that. It is counter fundamentals, but it's a bit of a strange one because the stock market's so strong. So that's not exactly all the story at the moment. It's been carried along by the strength in the stock market, the New Zealand dollar. So if we see weakness in the dollar index, and you notice that the stock market's popping, this won't be a terrible trade. It's in the area. It hasn't reacted off the area that you would like to see just now. It's in there at the moment, so if we see a pop off this, then that's a decent place to go long. Place your stop below the level. Make sure you're always going for a minimum of 2 times risk. If you'd like to join me in my inner circle and get an understanding of how we look at the financial markets, then click the button below and I'll see you on the inside.